hour. And right now, folks, we're going to talk to our man Teddy Kekstadt, as we do every Wednesday at 40 past the hour. You can head on over to the front page of TFNN, as I mentioned, right under the newsletter tab, the Tiger Forex Report. You hit subscribe. It's $97. You got a 30-day money-back guarantee. You gain access to the archive webinars, new report every Monday, updates throughout the week, and don't forget about under the services tab, Teddy's got a couple of outstanding webinars, folks, only $97. And if you're into options in any way, capitalizing on time with calendar stock option spreads, and then Japanese candlestick pattern stock and option strategies, check those out on the services tab. Teddy Kekstadt, good morning.
Good morning, Tommy.
So I feel like I always kick off these interviews that, man, we got an interesting day going on in the markets, but we do. CPI number, the headline there, the core, a little soft, I should say. The market's reacting. What do you think about the reaction? We have yields pulling back, a little dollar weakness. Maybe we kick it off with just this morning's reaction to that number.
Yeah, I think today's number, we've had a little pullback in the dollar and on yields. Over Monday and Tuesday, where they were pressing the new highs and lows and kind of just really not by very much. I think the number today gave them a reason to take some profits off the table. To be quite honest with you, I'm not surprised that the CPI came out a little softer. I mean, if you remember, it's a lagging indicator to begin with. So if you remember from mid-September into mid-November, we had a retraction in energy prices, gas prices, even food. But then what happened right before Thanksgiving? A dozen eggs went from $2.50 back up to $7.50. So I mean, we had a big spike in inflation. From during the holidays. It kind of subsided a little bit once we got to Christmas, going into the new year, but not by very much. So I think that this was just a reason. The trend has been really pushing on when it comes to yields and the dollar. So this gave them a reason to kind of, take a little money off the table, because we're due. From the Tiger Forex Report, our projected future trend channel for the dollar index, Monday we made a little bit higher high, and that just bridged the upper band of the channel, and now we're coming back towards, the central median line today. I like it. I think that unless the dollar index falls below 107.48, which would be a pretty significant drop over the next couple of days, I don't see it being very much more going on as far as the pullback. I think we might still test the lows a little bit with the dollar index, and also meaning yields getting a little bit more of a rally and dollar pullback versus most of the currency pairs. But I'd be very cautious with it. I don't think you're going to have, I think the bulk of the move has basically occurred from Monday into today already.
So is this a market that you're having some patience at these levels, or do you like the, and I know the trend has been there for sure, and tough to deny. I got just even the dollar. You're talking about higher highs, higher lows on this chart. Yes, we've pulled back a bit, but higher highs, higher lows. At these levels, is it a little patience? I mean, pretty interesting. It's Wednesday, Teddy, right? We come into another long weekend, which is the 4th out of 5 weeks. I was thinking about this, that we've had 4-day trading weeks, right? I don't know if that's ever happened before, only because you had to have a presidential day in the middle of the only time it happens 3 out of 5 weeks. You got Christmas, New Year's, and MLK. We're always a little, it feels front loaded in the year for our 3, but nonetheless, so we go away and then we come back and we have a new president, we have new policies, we have a new administration, maybe we get some executive orders. How are you approaching that as a trader right now?
Exactly. Between the inauguration and the Fed, Tommy, that's really what you have to wait on now, because I think you're going to see, like I said, this was a good reason for a little profit taking. You might have a little bit more over the next couple of days, but I don't think you're going to press it. I think you're going to go sideways into Friday. I would be very cautious with the markets come Friday morning. I think you'll have an early move after the opening of the stock market, and by 9, 10 o'clock your time, 9 o'clock our time, I think that it's going to be done for the week. Everyone's going to wait. We got a 3-day weekend, and obviously we have inauguration day. You're going to have all kinds of executive orders that foreign markets will be open, banks will be closed, stock markets closed. So it'll be, I think the computers will be jumping that evening, come 5 o'clock. Our time, so 6 o'clock your time. I think once the Asian markets are up, that then you'll start to see some movement, and we'll see. I would think that right now we have the rally that's going on in crude oil. I think it's going to run out of gas once Monday happens, and then we'll see how many of these. People are afraid of all these tariff talks. You know what? Here's a history lesson for you. There's only been 2 times in history, in the United States history, that we actually were aggressive with tariffs. doing something like this, which is actually meaning fair trade. It's completely is what it's all about, with no matter what country you're talking about. That's what tariffs are all about. And 2 times in U.S. history, we pushed back against countries who put tariffs on us and we didn't have them on them. We equalized them. Do you know what happened both times? We had upwards of 40% deflation.
Okay.
And over the course of 10 years, we had the biggest 2 growth periods that we've ever experienced in our history. Period. Bar none.
When were those around? I'm just curious.
First time it happened was around 1885 to 1895, and the second time was with Teddy Roosevelt around that time when he was president.
Nice.
So now that Reagan actually was the one time they started to come close to it, because he brought back the tariffs too, but he only got so much done. So all we're doing is repeating history, and if history repeats itself, then that means that the American consumer will be very, very happy a few years from now. You'll be seeing prices.
As traders,
seeing prices, yeah. And if it's traders,
I was just gonna say, as traders, man, it's just we got a period of, I think, some volatility, in my opinion, coming down the line, because you make some great points. There's obviously people on the other side, and the market is struggling a bit to figure out, let alone what the actual policies are going to be, right? And then the impact of what they may be. And we have the reports out there. We find out, and the fair trade deal, I try and think of things. I say it all the time. I think of it in Tommy's perspective, right? He's going to be 4 years old in almost a couple weeks, which is crazy. But is that a good thing 10 years, 20 years, 30 years down the line? Yeah, probably. Might we face a little short-time heat? Maybe, but we'll get to find out, man. Either way, which is pretty cool as traders.
We're already dealing with a lot of pain right now, though, Tommy.
Say it again for me.
I said we're already dealing with so much pain right now. How much?
No, listen, on the China deal, man. When you start thinking in decades, man, and that's how you think. If you got a young kid, you should, you better believe that we better keep China in line, man, because they're coming for his lunch, right? Totally.
Right. And here's something. One thing to think about. Commodity traders will remember this the most, because all commodities, especially when you have big bull run-ups, what happens to them eventually? They pull back. You don't have prices that go skyrocketing in raw commodities, even food sectors, forever.
Right? Yeah.
If they go up, eventually they come back down. So this could be the situation where we can see all of a sudden you're going to see commodity prices tank over the next couple of years.
Okay. Yeah, that commodity market, it's just simple supply demand, right? The prices get high, they start driving up the supply, et cetera. You get the rotation, whatever it is, across the board, and eventually. Can you hang with us for one more segment, Teddy?
Sure.
Okay, perfect. Maybe we'll talk some selective currencies. We'll take a look at some more, folks. Stay tuned. We got one more segment. We'll come back. We'll talk with our man, Teddy Kekstadt. We'll be right back. Welcome back, folks. We got markets even trading above where we were. You're making session highs. We're up by 1.6% in the S&P futures right now. NASDAQ 100, we're up by 1.9%. Quite a market, Teddy. What do you think, man? What do you think about these equities at these price levels on the reaction?
I like them, and also I think earnings. You were talking about the bank stuff earlier before I came on,
right.
And everyone, especially around the new year, like, what do you think about the market? And I'm like, you know what? I give the same answer all the time. As long as earnings are strong, the market's going to be firm. Period.
And man, these earnings, the last couple of years, they just crush it across the board. Banks kick it off, take in all the money, and then the tech stocks have delivered, and nothing seems to be changing. I agree.
But the margins are getting a little choky. So that's the thing you got to worry about, how these earnings are really holding up.
Those JP Morgan, just remarkable numbers for JP Morgan. And let's see, they almost gave it up. They're up by 0.5%. Talk about expectations sky high.
Well, that supports what we've talked about for months now. Remember, I said once they started, the yields have been firm and the banks are getting the money for less. They got to make more money, right?
Totally. That's, just these charts, mammoth accelerations. Now they got to live up to it, man. JP Morgan, you're talking about $100 2 years ago. You're talking about 140 just over a year ago, and you're pushing 250 for the bank of banks out there. The dollar, Teddy, I just want to ask you, in general, dollar, of course, we've talked about it extensively. The DXY, you hit 110, we're at 108.50. We've talked about different banks out there, central banks. Are there any currencies that jump out to you? Because we've talked about that basket before, but I know we've talked about the individual currencies, and, we got about 30 seconds left, unfortunately. But any of those currencies you want to mention that kind of jump out? I know you're watching so many of them.
Yeah, Euro, US dollar is going to parity.
Say that one.
Later.
Euro. Oh, it's going to
Euro US
That's
dollar
why
is going to parity.
I was looking at it before. There you go, folks. I love it, Teddy. So much great actionable information, man. I appreciate it as always. Have a great week, and we'll talk to you when we got some new policies in line next Wednesday, man.